Hey, I turned a $7,500 trading account into 50 grand in my first year live trading, and I'm on track to break six figures in my second year. And I want to show you how I did it and the lessons I learned along the way. Now, it wasn't all sunshine and roses getting there, but it can be a lot easier for you if you follow a few easy steps that I'm going to outline in this video. So, a little about me. My name's Jim, and I'm 57 years old and have been dabbling in the markets for the last 20 years or so, not following any specific strategy, and have made a decent amount of money investing for the long term. About 3 years ago, I got interested in trading the markets on more of a shorter time frame, and boy, that's where the roller coaster ride started. Now, if you're watching this video, you're probably experiencing the same thing, or maybe you have been searching for a way to make that extra income that will give you the security needed to dump that 9 to 5 job or to build that retirement account. Now, don't quit that job just yet, because that 9 to 5 is paying for you now. But if you follow along, I can show you how you can, and trading will pay for your future. You won't accomplish this feat in a week or a couple of months, but you can accomplish it, I'm sure of it. Now, if you're a young person and you've heard you can make a shit ton of money in the markets, I'm here to tell you that you sure can. But you need to be strategic, and I will show you how. Now, all of this info is free, but you gotta apply it. You see, I have young kids as well, and thought, where can I memorialize this info so that when they are older and want to refer back, they'll have me teaching them? So I started this YouTube channel with the sole purpose of doing just that. And guess what? You can follow along and learn from my journey as well. So welcome to my channel, and let's get started. So what I want to talk about today is really the secret sauce. Now, you can use this to start out with a smaller account and learn the skills needed to grow your account month after month, year after year, without being a slave to your trading screen, and enjoy your life along the way. You see, I invested $5,000 and hired a coach that taught me how to trade on a daily time frame, and I'm going to give this info all to you for free. Trading daily charts allows you to get into the market and close your trade in generally 1 to 3 days. Then just rinse and repeat. Sounds pretty simple. Sounds pretty easy, doesn't it? Well, the mechanics are just that simple, but that's just one part of the story. It's the rest of the story you need to master, and it begins with you. So erase what you thought you knew and follow along to learn what I have learned about trading. You see, if you learn how to fish, you will never go hungry. So let's learn you how to fish. Now, you're going to need a trading strategy. So what is that really? There's thousands of strategies out there and indicators that you can follow. I would suggest that you start with a couple of easy ones, like a 2 EMA crossover, for example. Now, what's an EMA? An EMA is a exponential moving average. EMAs just smooth out the price action on the chart. I personally use a 3-period EMA and a 6-period EMA in my trading strategy, and it works just fine. I also use a trend-based indicator like the ADX, but that's not really the important part. The important part is that you pick a couple of indicators and you start to backtest and prove that they work while you develop a set of rules that you can follow consistently. And we'll talk about that some more. The most important thing that you're going to have to come to terms with is it's not really the trading indicators that's the problem. It's generally the trader that's the problem. You have to be disciplined and follow your rules. That is the most important lesson all traders must learn to follow. It's a lesson that I had to learn to follow to go from getting whipsawed in trades because I thought I knew what direction the market was, because I thought I knew which direction the market was going to go. But you see, you never know what's going to happen in the market. There's really two things that can happen. It's going to go up or it's going to go down. I tend to try to stay out of sideways, choppy markets. Now, a trading book that I would recommend every new trader and experienced trader also to read is a book called Trading in the Zone by Mark Douglas. This is such a good book to read to help you understand just how truly important being disciplined and learning to follow your trading rules is to your overall success in the market. You see, you can make a lot of money doing this, and it's not very difficult to do, but you can lose a tremendous amount of money real fast if you're not disciplined and follow your rules. As soon as you let emotion factor into your trading decision, you might as well just hand your money to some random guy because you're going to lose it. Now, what I would do is pick a couple of commodities that you may be familiar with, the S&P 500 or the Qs, or even futures commodities like 30-year bonds or corn or soybeans, and practice backtesting your trading indicators on the daily chart and develop a set of rules. This could look something like this. Like I said before, I use a 3 and a 6 period EMA. Now that's on a daily chart, so each period is a full day of data. So I would take my 3 period and 6 period EMAs on my daily chart along with my ADX indicator, and I would advance it one day at a time, starting a year ago, for example, and advance it one day at a time from the right side of the chart and look for when the 3 period EMA crossed up over the 6 period EMA in a long market, long being a bullish market, meaning the prices are expected to go up, or the 3 period EMA were to cross below the 6 period EMA in a downtrend market where you expect prices to continue down. I would also look at the ADX, which has 2 other indicators built into it, which are the plus DMI and the negative DMI. And on an uptrending market, if the plus DMI is over the minus DMI and the ADX value was at 22 or greater, I would use that to kind of confirm the trend. One other important thing to mention is that when you look at the higher time frame, so on a daily chart, that would be using a weekly chart, and look at it to try to identify what is the daily trend. Is the market that you're looking at trading up on the daily trend? If so, I'd look for bullish trades or up trades on the daily chart, and vice versa if it was trending down on the weekly chart. The basic premise here is you're using the higher time frame, that being the weekly chart, to identify the overall trend of the market, and then look to take trades in the direction of that market. So getting back to the backtesting that I was talking about, continue to advance one day at a time and start to plot out results when the 3 EMA were to pass over the 6 EMA, or whether it's up or down, it doesn't matter, as long as it is in line with the overall longer time frame, and then make sure you jot that information down. When this happened, and log and chart your results in a trading log, and you can do this in a notebook. You don't have to be anything fancy. I do it in an Excel spreadsheet now just so I can filter it out and look for different things or go back and review trades. But you can back test a year's worth of data in just a few hours and get a year's worth of experience in that time. And then keep repeating that and modify or look for consistency in your trading indicators as it applies to that crossover. And the goal is to get to, my goal was to get to a 90% or better win rate while backtesting before I started to live trade. Now there's a couple other things that are pretty important here. The biggest one being managing your risk. So if your profit target is less than what you stand to lose in making that trade, then that's not a good trade to make. So you need to look at support and resistance on the chart as well. Now, I've made a video about support and resistance, so you can go back on the channel and check it out. It really, really explains what that is. Now, what's simple about my trading strategy is that it allows me to check the charts, for 10 or 15 minutes at the end of the day before the night market opens, and place a trade based on my rules. The rules that I developed while backtesting those markets. Now, when you stick to just a couple of markets, you start to learn the ebbs and flows of those markets. I don't worry about news. News is pretty much factored into the price of the commodity. We are retail traders, so we are retail traders, so nothing we do has any power to influence the market price. And what you're hearing as the latest news that may be affecting the price of the commodity that you're looking at, trust me, it's already figured into the price. Us retail traders can't be news-based traders. That's a very risky proposition. You want to stick to the fundamentals, stick to the basics, make it easy so that it doesn't consume your every waking hour trying to talk yourself into whether or not you should place a trade or not. It's really easy. You place your trade, you place your corresponding profit target and your stop loss, and you check it the next day after the market closes. It doesn't matter what happens during the day, it's where does the price close. The hardest thing you're going to learn to master in order to be successful trading is being disciplined. Being disciplined is really the secret sauce. You have to be disciplined to wait for your setups. And when your setup occurs, you take the trade. If it doesn't occur, you don't take the trade. And you check it again the next day. And then you check it again the next day. My goal, or what I found, not really a goal, but what I found is that the way that I'm doing it, my trading system triggers 2 to 3 trades a month. And that's really all I need to make that shit ton of money that you've heard about. Think about it. If you trade one futures contract in 30-year bonds, where the average daily range on a winning trade is 30 or 32 ticks, that's about $900. Now that doesn't sound like a lot, but for most people it's a week's worth of wages. And that's one contract. As your account grows and you trade 2 contracts and then 3 contracts, by the time you get to 4 contracts and 5 contracts, at 5 contracts, that $900 is now $4,500. Your goal should be to get to 10 contracts. Now that may take you a year or a year and a half of disciplined trading as you build up your account. But at 10 contracts, that's $9,000. I don't know many people that can't live off of $9,000 a month. I know I can. The second biggest thing I think you're going to have to learn, and it reminds me of that Kenny Rogers song, The Gambler. Don't count your money while you're playing at the table. That kind of tells you how old I am, but that was a pretty popular song in the 80s. Don't count your money while you're sitting at the table. No one to hold them, no one to fold them. That's the basic premise in trading. When you enter a trade, you have a pre-identified profit target and you have a pre-identified stop loss. Now the stop loss is what limits your losses in the trade if it happens to not go in the direction that you thought it was going to go. And if you stick with, at best, a 1-to-1 profit to risk ratio, what I really like is a 1-to-2 or even a 1-to-3. But on a 1-to-1 profit to risk ratio, you can make a very good living trading with very little stress. But it starts with identifying those initial indicators that you want to use. There's all kinds of books that you can read about them if you so choose. if you've got any experience trading in the past, you probably have a few favorites. But what you probably haven't done is back tested those indicators to develop a set of rules that you can follow from a very disciplined approach and start to make money in your trading without much stress. When everything is going right and you learn to actually follow your trading rules, it gets to be pretty boring. Trading in the markets can be like gambling for a lot of people. You don't want it to be gambling. You want it to be boring. And as you focus and concentrate on placing good trades that follow your rules, the money is just a byproduct of that. It will come, trust me. So, I've made several videos on the channel. They're under a playlist called Learn to Trade. You can watch those. They're much longer than this. I gotta admit, the video quality isn't the best because I'm not a professional YouTuber. I'm just a guy who's learned how to trade and is happy being bored while doing it. And like I said, I wanted to share this information with the kiddos for when they're older and get interested in it. But you can take the same information and start your journey. It's very satisfying knowing that money is available to you once you learn to follow those trading rules. I can't say that enough. Backtest, backtest, backtest your trading rules to develop that set of guidelines that you'll use to decide whether or not you enter into a market or not. Because once you've entered into it, it's live, game on. Your real money is at risk. So I strongly suggest you take the time to develop those trading rules, modify that strategy as needed to achieve that 90% win rate, and then let it rip. I hope you've enjoyed the video. I've definitely enjoyed sitting down and talking with you tonight. There's a link in the comment of the video where you can download a free ebook that explains more about this concept and will teach you how the market moves, at least what I've learned about how the market moves. And watch the videos at your leisure. You can listen to them while you're driving to and from work in your car. Leave a comment. Let me know how things are going for you. If you've liked the video or if there's something that you want me to make a video about, I'll be more than happy to do it. Look forward to sitting down with you guys again. Have a good night.